So the point of an education bond is to assist with a savings plan for education costs. Parents have children starting school, their school fees for the life of their education to consider, along with stationery, uniforms, excursions, etc. So as opposed to just saving money aside in your bank account where you're getting minimal rate of interest, it's accessible for other kind of things. So these education bonds will allow you to set up a regular investment plan. So an amount is transferred from your bank account on a monthly or quarterly basis to the bond, with a calculation done prior to get a good understanding of, all right, this is what your expenses are going to be for the year. If we deposit X amount with the returns added to those ongoing deposits, your expenses will be covered for that year. Any residual balance continues to be invested and earns a rate of investment interest. So the benefits of using a bond over a savings account are firstly the rates of return difference. On a bank interest account, it's quite low because we have a low cash rate at the moment. And then in an education bond, the funds are invested in say growth investments like your superannuation is, for example. So there's a lot higher rate of return, but there's also tax benefits. So any investments in your personal name, like in a bank account, is going to be taxed at your marginal tax rate, whereas an education bond has an internal tax rate that is capped at 30%, and that's lower than the average marginal tax rate. And some questions that we get are if grandparents set up these education bonds to fund their grandchildren's education expenses. The question is, well, what happens to the monies if we pass away prior to our grandchild having completed their schooling or tertiary education? Well, the bonds are transferred into the estate, and the estate will continue to pay the education expenses out of that bond. So it doesn't just cease and the money gets withdrawn and paid out.